Hey guys, Freaky Finance here. Last week we looked at Salem Media Group, and this week we're going back into the mining industry, and this time we're looking at copper. It's going to be more of a theme, I think, as we go through the next, I want to say, 2.5 years. Is every now and then I'm going to do a copper company, mainly because they're so interesting, and the future dynamics that I'll get through near the end of the video for copper are very supportive in the long run. Alright, well, let's get into it. So this company we're going to talk about today is Capstone Mining Corp. Really, they have 3 mines in 3 jurisdictions, 2 of which are producing and 1 of which is in development, and the mines generally get better as you go more south. Arizona for this company, it's their old traditional one, Pinto Valley. In the US, the US is a friendly mining jurisdiction. It's the slow, steady cash flow. They're recently getting more out of it because they're putting more capex into the facility. The Mexico one is pretty good in terms of cost per pound. At least on the latest quarter, I think it was around $1 a pound for cost of copper, which is pretty nice there. So the more production we get out of Mexico, and that's starting to increase lately, the better we've seen the free cash flow, as well as copper prices in general have been very well over the last year relative to what they were pre-COVID, right? Then you have Santo Domingo, which in my opinion is the main reason to own this one. Though you're taking a degree of development risk here, is this mine comes online when I think copper is going to be more scarce than what it is today. The balance sheet, whenever you look at a copper play, got to see the debt level, right? So for this company, they currently have no debt. One of the reasons they've been able to do this is, one, the organic free cash flow from their current mines are doing well at these higher copper prices. Another reason is that they're streaming some of their resources out to get cash up front for this development. And you can see the market cap in terms of US dollars, at the time of this presentation anyway, was just under $2 billion US dollars. I think it's settled back a little bit lately, with the Delta variant concern on global growth putting pressure on copper prices, but copper's still over $4 a pound right now. So these companies these mines are still making a lot of cash flow. Year-over-year production is what matters to me right now, and you can see that they're getting quite a bit more out of their Mexican mine lately, which is helping to reduce the overall cost per pound for the company. Consolidated guidance for cash costs is actually the $175 to $195 per pound, and you can see the Mexican mine doing about $1. And Pinto Valley going in between $210 and $230. So the more production that comes out of the Mexican mine, the lower the cost per pound. And so one of the reasons why I'm looking at now is the recent upticks in free cash flow have been pretty staggering. So one it's the prices, but 2, it's the production and the cost. And yeah, they hit $110 million in the latest quarter in free cash flow, which isn't small. Like I said, the company is only, its market cap is like $1.7 billion. So turning out $110 million in operating cash flow, not free cash flow. There's a difference, especially for this company. We'll talk about that in a second. Anyway, in terms of operating free cash flow, this company is starting to screen very cheap because the latest quarters have been very good for the company because, one, copper's been good and production's been ramping. And we can see that here as well. When you're doing the year-to-date 6 months, you can see that, yeah, they're at 91 million pounds 6 months in versus 74 pounds last year. So not only has copper prices gone from 250, where it was 6 months prior year, to the 6 months average of 440, right? You're also getting the production cadence being favorable, as well as the economics of the mine, because more production comes out of Mexico. One of the things you can see is that capex is also creeping up here. This bottom line right here was pretty much averaging between 20 to 30 million in quarterly capex. Now you can see it start going from 30, and then all of a sudden we hit 50. And we're going to see this capex ramp up for the Santo Domingo mine in Chile. Then you can see the favorable, if you're doing it, really you'd own this for the cash flow, but a lot of people look at earnings per share for some reason. You can see that the EPS is just starting to shoot up because, well, I've already talked about it enough already. It's the production cadence with the favorable copper prices, right? Cash flow statement looks pretty good. Normally I download these, but been super busy lately, so I wanted to pump out a video anyway today. But you can see operating cash flows very high. It's a kind of a fake high on a year over year. It would have been higher anyway, but you can see there's 180 million they've received from metal stream deposits. And one of the things they've also been paying themselves quite well lately, because that's not a small amount for a company this size. And for the record, I don't own this company yet. It's something that's on my horizon. A lot of these copper plays that I'm going to be talking about are going to be, I'm trying to time when to get in. I know I will get in. Just need to figure out when, right? But yeah, you can see them paying down their debt. That's why they have no debt. They paid it down. And they're currently shoring up the balance sheet with the streaming for the development of Santo Domingo. Then you can see shareholder dilution there as well. Again, that's probably linked to the compensation expense we just saw in the cash flow statement. Yeah, an income statement, like we thought, it looks good because, well, supportive copper prices and supportive production cadence, right? But you can see how swingy this is when copper prices, if they ever pull back, the same with any mining commodity industry, right? You can see it just swinging like crazy, right? So this company has a lot of embedded leverage to copper prices, is what I'm trying to say. But yeah, you can see pretty good, right? 36 cents EPS, 6 months in, run rate that, you're at 72 cents. This thing trades at, what, around 5, 5? Oh yeah, under 5 now, 481. But yeah, in the balance sheet, like I said, they have 168 million in cash, which is pretty good for this company. Like I said, the market cap now is only like, what, 1.7 million US. They're getting a lot of cash, but again, this cash is going to be used on the Santo Domingo mine. And here's another way just to show the favorable economics. You can see EBITDA in the prior year quarters before copper prices really started to ramp up. You can see that just the EBITDA was barely breaking by, right? You can see this 3 million, 4 million, right? And then all of a sudden you see copper start shooting up in the realized sale price, and you go to 30 and 45, and now you're at 88 and 82, right? So you're like, okay, yeah, the share price has gone up quite a lot, like 10x or more, but the operations have gone up about 20x in terms of the EBITDA, and that just tells you the leverage that's embedded in this company for copper, right? which is pretty crazy. But this is the main slide. If for any takeaways for this company is the Santo Domingo mine and the importance of it. So you can see right here on this right hand side. Well, let's start on the left hand side. Cash costs slowly come in as production increases, and we've seen this with other mines. The more production in one area, the more scale you can get out of that mine and lower the cost, right? Cash cost. So we do see a slight uptick here, but we're still around that dollar line. What they're giving for a $1 per pound cost for Mexico. But overall, you're seeing a positive trend in Pinto Valley, which is important because right now it's a lot of the production. So favorable development here, because you have favorable production cadence, right? And you can see that on the aggregate, you can see the cash costs continue to decline in between 2021 and 2022 and 23. But the main reason you want to own this is for 2024. And then they put two 2024s here. One is assuming they get 50% of Santo Domingo. The other one's assuming they get 70% of Santo Domingo. Right now they own 100% of it, but they're trying to find a partner because these mines are CapEx intensive. So they want someone to help front some of the cost, right? Or else this company's probably going to have to take on some debt or do some more interesting streaming deals. But we'll have to see. Ultimately, it would be nice if they could get 70%, right? Because this production cadence, instead of going from 183, so not bad, right? You're getting like 10% jumps, right? And then all of a sudden you go from a 10% jump to almost 100% more production from this mine in Chile, right? And not only that, well, we'll talk about the timing, but 2024 is when I'm starting to think copper is going to start getting priced more scarce than what it is today. And you might be like, well, copper's already priced kind of scarce. I'm thinking 2024, 2025, 2026 is going to be pretty interesting time for copper prices. We'll talk about that in a second. But anyway, that's this chart right here, Santo Domingo shoot up production, and you can see the cost just get destroyed, right? Go down to almost $1 average for the entire company, $1.10, $1.20. It's just, yeah. But again, the reason why I think the market's this company's still kind of cheap in this kind of production cadence is because there's development risk here, right? Something could go wrong, the cost could overrun, timing could be bad, but they've already locked in some degree of the risk of Chile, but we'll talk about that as well in a bit. So lately there's been a lot of discussion with increasing the Chilean mining royalty tax. They claim their Santo Domingo mine is expected to be protected. So they have a tax invariability system for a period of 15 years post-commercial production, and 15 years represent the majority of the 18-year life. So they're saying we should be protected if they do try to increase taxes on them. The higher tax rate really just supports a lower bound on copper prices because people aren't going to put cash to work unless there's a higher NRV after tax, right? Anyway, kind of rambling there, but I saw that on their annual on page 8. I thought it was pretty interesting. So they're like, okay, we kind of hedge some of this risk with the increase in mining royalty taxes that I've been hearing about lately. And so their initial plan was this Santo Domingo mine is going to cost them about $1.5 billion. Realistically, it's probably going to cost them 1.6, 1.65. But that's usually just the nature of projects. We'll see. We'll see if this little guy can pull it off. But they're currently securing a lot of cash. They got a lot of organic cash flow because the copper price is so high. And they're trying to figure out how much of Santo Domingo do we want? How much cash do we want to put up? So I think the reason why they're getting so much cash flow right now from streaming as well is they want to get the biggest piece of the pie they can because this mine is so attractive. And it does look really good. So that's why I'd be owning this company, is because of this production cadence in 2024, right when I think copper is going to be more scarce, right? I do have a cobalt kicker here, so they're going to do the studies these years in 2022 and get the permitting, and then they'll start. And that also has a a pretty good NRV, but it's also very capital intensive. And yeah, if you're trying to play that battery grade sulfite, this could be a really good place for cobalt outside of the DRC. That's an interesting metric, right? And one of the lowest costs at -$4 per pound. And that could be an exciting time, right? Because that's when we have a lot of EVs. Like I've been listening to a lot of calls like Stellantis and Volkswagen lately, and a lot of their offerings for vehicles, they're going to have both. They're going to have their ICE, so their internal combustible engine, and then they're also going to have these BEVs and electric vehicles. So you can get the same SKU in either type. And I think a lot of people are going to start taking the electric vehicles, which is very supportive of copper, but also supportive of this cobalt option. But we'll have to see, right? Maybe that's what they decide to do. They decide to put more into the Santo Domingo than partner for the cobalt. Who knows? But this outlay of cash is not small either for this option, cobalt. You can see the mine is just north of the capital, Santiago, Chile. Basically, it's just south of Diego de Almagro. As far as I could get on Google Maps, anyway. I like to try to visualize them, right? You can see it's a very copper, well, historically been a very friendly copper place because the whole country relies on copper exports. Like I said, it's 40% of the world's production of copper is in one little narrow strait in Chile. Anyway, so one of the things that's interesting is that the market already started picking up on this, right? So you can see, we saw the numbers like Q1 and Q2, so up to here, wasn't actually really good for the company, right? The adjusted EBITDA was like 3 million, 4 million, and then the next quarter it was 30 million, the next quarter was 40 million, the last 2 quarters have been 80 million each, right? So you can see the market's already starting to price in, well, one, it ran up with copper prices in general, which makes sense, but two, they're trying to get this production cadence. And so a lot of people would be like, well, it looks like it's priced in, right? This thing went from 30 cents to 430, right? 480. They wouldn't be wrong entirely, but the future, like if they can pull off Santo Domingo, this thing's a steal, right? This thing's easily over 10. But you have that risk, and then you don't know what copper price is going to do in between now and the production cadence of Santo Domingo, say in 2024, assuming they can execute on time. And so this is just one way to play a miner that has a good production cadence right when I think copper prices are going to be weaker again. So I've been reading quite a bit about copper lately, and this is going to be more macro and not specific to Capstone, but in all miners in general, it's kind of how I'm looking at it. And I see a decent amount of production coming online for copper in 2022, again chasing the highs, and an okay amount in 2023 as well, but the main surge in supply in 2022. So what I'm hoping, it might not happen, is that copper prices come back down, and ideally it'd be nice in like the 370 range. That's when I'm going to start getting more aggressive for the long run. And if it doesn't happen, I'm probably going to buy at certain times anyway for certain companies. The main reason why I say that, like 2022, I'm looking. So we got the rest of Grasberg still, and then you get Ivanhoe starting to ramp up some more. So they've already just started. I don't know how familiar you guys are with the industry. So Kamoa in the Congo starting to ramp up. That's a monster mine for copper, and that's going to be a steady supplier of additional copper over the next 2022. I want to say all the way up to 2027, and it's a huge production cadence scale. Escondida, which is a pretty big one for 2022. And you have some smaller ones, Mina Justa, Budokan, but quite a lot coming online in 2022 is what I'm trying to say. And that's kind of what you expect. A lot of these miners will just use their existing mines to get more out of them, right? As new mines usually take longer to react to copper prices. But one of the things that's very interesting, so we got Teck Resources coming online in 2023. That's going to be a good one for Teck. So I'm looking if there's weakness in Teck between now, like I was on the fence yesterday about punching it, buying Teck. Today is August 21st, 2021. Tech's going to start scaling in 2023, 2024 really hard as well, right? So that would be another way to play copper around that same time period. So I'm trying to find companies that have, what I'm hoping is that if production comes online in 2022, that the price of copper comes down and some of these miners pull back a bit more. Or who knows, maybe there's an opportunity now with the world thinking the Delta variant's permanent and impacting copper growth forever, or demand growth forever, right? We can take advantage of that as well. Maybe that's what we should be doing right now. But anyway, in 2022, that's when I think there's going to be enough supply. The demand will be there, but it'll be at least a similar amount. But I just think the supply is going to outscale it for at least 1 year. And hopefully that puts downward pressure on copper, downward pressures on these miners, then I can get in some more aggression, right? Because I still own Freeport, but I'm trying to expand the copper holdings, right? So Teck would be an interesting one in 2023 as well. So buying it sometime on weakness in 2022 would be ideal. Because 2023, 2024 for Teck, if copper prices go where I think they're going to go in 2024 and 2025, 2026, 2027. It's insane. You got Ivanhoe again coming in 2023. You also have Anglo American in Peru, or Quilaveco coming online. That's a big one. Yeah, I kind of have like a timing thing here because I'm trying to figure out the best times to try to play some of these mines. Ivanhoe again in 2024. Oh, you have Turquoise Hill in 2024 coming online pretty big here in Mongolia. Quilaveco again, and Tech again in 2024. We said that. Ivanhoe again in 2025. Then you have this mine, 2025. Santo Domingo's on here. Then you have, Mongolia again in 2026. Then you have Ivanhoe at Kamoa again, and Mongolia again in 2027. And the thing that's interesting is that supply actually starts falling off pretty hard in 2024, 2025, 2026, 2027, enough that I don't think it's going to keep up with demand. And so what I'm trying to do is find opportunities to buy some miners in between now and 2024. And a lot of these miners that are coming online, some of them are more riskier because they're developing, right? This company at least has some organic cash flow because they have 2 good mines. Whereas, say, Turquoise Hill really relies on that Mongolia mine, right, to start really ramping up. Then you have Ivanhoe, which is already starting to get priced pretty good, like most miners have been lately. But that production cadence for Kamoa is pretty crazy at Ivanhoe. But anyway, one of the reasons why is because I've been looking through quite a few different sources, and there's just not enough being spent on sustaining capex or for new projects coming online in that 2024, 2025, 2026, 2027 period. So you might actually get something happening in the back half of this decade, in that 2026 period, where you see this inflection where supply simply flatlines and copper actually accelerates in demand. So even if it just stays at 3% a year, it's going to be putting pressure on copper prices. But if it accelerates, which it should, because most people know electric vehicles 4 times more copper. Well, numbers have come from like 3.5 to 4 times. But there's another aspect of here, and that's the renewable energy push, right? For the renewables, wind just takes up so much copper. Like wind is just off the hook, especially wind offshore. It's like for the same unit of energy, it's about 5x for offshore. Quite a bit less for onshore. It's about 3x for the same amount of energy. Between wind and coal, and that gas already takes about 50% more copper than coal does. So even the natural progression that we've been seeing over the years from coal to nat gas has been supportive of copper, but not to the same level, right? We're talking 50% more for the same amount of power. But these wind and solars, like solar is double coal, nuclear is double coal. But anyway, there's huge implications for copper. And the thing that's scary is that there's not enough supply coming online in 2026 at all. Like we're talking year-over-year supply declines, not just flatlining. So it goes like up 2022, like supply and demand keep going up together. And supply, in my opinion, should probably pass it a bit in 2022. And then you get this kind of like flattening 2023, 2024, 2025, and then demand should either, I think, will accelerate. At the same time, you're having a declining supply. So it's like it's pretty crazy. And some of these forecasts are rosy, but I'm like looking at a lot of these banks and they're like forecasting $5 copper 2025. I think Goldman had one at $6.80 copper 2025. And for these companies at those prices, with these production cadences and forecasts, that they look really good, right? So the trick is, it's not, am I going to buy it? It's more when. And that's a hard question. But yeah, Ivanhoe, honestly, is ramping up this entire between now and 2025, and actually it ramps up again in 2027. It's one of the few that actually has a production cadence out that far. Tech Resources kind of talked about that, planning to buy that at some point, ideally during weakness in 2022. And the majority of its cash flow actually comes from copper then. Turquoise Hill, so that's one I'm also looking at. Ideally, it'd be nice to buy weaker in 2023. We have a Mongolia major phase coming on in 2024. And then, Mongolia in 2026 and 2027 is one of the few mines that are actually still ramping up during a period where I think copper is going to be really tight, or at least on paper, that's what it looks like. Copper Mountain Mining, this one is smaller as well, kind of like Capstone, but even smaller. This one I kind of want to buy in early 2024. Interesting enough, it actually gets weaker in 2023 versus 2022, and I'm hoping the market punishes them, and then I can buy it really good then. But maybe it's already priced in, right? Maybe all this is priced in, but that's how I'm attacking the copper angle. And then Capstone, honestly, the production cadence is fairly linear up, but it really hockey sticks on Santo Domingo. If I can get that, it's an ideal time to buy it, right? Whenever copper's weak. both Capstone and Ivanhoe are ones that I'd like to buy probably whenever copper is weak in general, without having to try to time a specific year. But ideally with this one, you want to buy it before Santo Domingo starts really ramping. Right? A lot of these developing ones, you have the execution risk of actually getting the mines to production. But anyway, that's my thoughts on copper. I'm gonna kind of take a little macro stuff out there in a bit, but I'm pretty bullish on copper, especially, like I said, in that 2024, 2025 inflection point where supply no longer is growing. At the same time, demand inflects up. Like I said, you got all these EVs coming online. People are starting to buy them now, but I mean, all the SKUs, like all these car manufacturers, like the real car manufacturers, not the Teslas, not to piss anyone off, but I mean like the normal car manufacturers you see cars every day are going to be offering SKUs a lot more quicker for electric vehicles than what people think. So it's coming, and it's coming pretty quick. And the trick is, when do you get in? I mean, I'm already in with Freeport, but I mean, to get in more, like I'm talking between maybe even 10% of my portfolio leveraged to the risk of copper prices, maybe more, if it gets really cheap. Going into this, what I think is going to be a scarcity mindset by 2025 at least, for sure. But yeah, it's going to be an exciting next 3.5 years to try to pick up some cheap copper plays that have a good production cadence right when you need it, right? Because Grasberg has a decent one, the Freeport one has a decent one, but it levels off this next year, and the next year after that, the production cadence levels off, right? I got to try to find some ones that have that production cadence right when I think copper is the most scarce. But yeah, anyway, rambling a bit there. I just thought I'd share some thoughts on copper, and have a great rest of your weekend.